Hello everybody, welcome to another update on the stock screener. Today we are going to talk about Danaos Corporation. This is a container shipper and is very correlated to shipping rates or the Baltic Dry Index. As you can see here, we had a massive drop here, and that also corresponded with the Baltic Dry Index dropping. Then it did nothing, and now we see high volume and the chart goes straight up. Now the question is, will this continue or are we topping out? So that's the question right now. Just wanted to show you the dry bulk rates, and they have also shot up, and it doesn't look like this is going to end soon. Probably this can keep on rising until next year. What's the chance that this will suddenly drop back down? I mean, there's not a lot of chance for that to occur. At least it will stay high at this level. And you can also see that here it corresponds with the Baltic Dry Index. So we had this drop in 2008, then it did nothing, and now it starts rising again. So let's dive deeper into how the Baltic Dry Index actually works. You need to know what has happened. Okay, let's take a look at this chart. So in 2008, we had, well, this is a chart of the order book. So the amount of ships that are being built. So here we see that the order book goes up. So they built more ships. And when you have a lot of ships being built, they all come into the market. And then there are too many ships. So somewhere here, we have too many ships. And that's where the Baltic Dry Index, the dry bulk rates crashed because we have too many ships. Then when this crash happens, then nobody wants ships anymore. So the order book is going down. And we have here containers, crude oils, product tankers, dry bulk. So all of them are going down. And no ships are being built because nobody is interested anymore. But then we see this happening again. So how do we explain this? Why are rates going higher? And that's because of the amount of ships that are needed. Let's take a look at another chart. So what do we see here? We see the idle fleet. So how much of the fleet is being used? So here we can see idle fleet is only 0.7%. So almost the entire fleet is being used. Okay. That means there's no fleet left. And also no fleet left. There's also no orders. Orders were at almost 10% to the fleet. So there's no fleet left, and also there are no orders. So what does this give? This gives a rise in shipping rates because there's a shortage in ships. So that's where we stand now. We have no orders, so nobody is building ships, and we have huge utilization of ships. So they all need ships, but nobody is building them. We are in shortage. Now I need to say also that there has been a change here. So the order book has finally started to rise to 20% now. But at the top here, we were at 50%. So for the top here, the top of the order book was at 50%, above 50%. Now we are at 20%. So it has started to rise now, but there's still a long way to go to get back to the 50% top. So I think that we still have a year or two left. So we are probably somewhere here now, 20%. And we can still rise a few years, at least 1 year, until we see the top. And here we are at 50% order book to total fleet. So 50 to 10, now we are 20, and this will rise more until we get to 50 again. And that will be the top of the Baltic Dry Index. So probably this thing can keep on rising. We will see a top in a few years from now, and that will be the time when you sell the shipping companies. But we're not there yet, we're just starting here. I know I'm a bit late to the party now, but better late than never. We still have some juice left here, maybe a year, okay? We are seeing the interest coming back in the shipping industry, and you can see that here in the order book. But the thing is, when you start ordering these ships, and they started somewhere in January, okay, you need to build them, and that takes time. That takes at least 2 years time to build ships. So these ships are not going to come into the market next year, right? So we still have 1 year to go up because we still have a lot of utilization. There's no idle fleet. So yeah, I think we need to get into the shipping industry now while it lasts, maybe for a year, and then we get out after a year when the top is reached somewhere here on the Baltic Dry Index. And you can keep watching this chart here. As long as these rates go up, we are safe. So let's take a look at other fundamentals. We know that container shipping market is going to rise 8.5% per year, from 8 billion to 11 billion in 4 years. That's a very bullish market. You can also see that here. You can see that each of the regions is going higher. With the largest is apparently Europe. Europe is the largest market for container shipping. Then we have Asia, and then we have America, South America, and then Middle East and Africa. So you can see that there's a healthy demand for container ships. And this has actually accelerated. 2015, we have 1% growth. Now we are at 5% growth. So this is a bullish market, and we are just starting. I think we have still some years left here. Now, which one is the best? I think Danaos Corporation is one of the best to buy. And I'll tell you why. Let's take a look at the fundamentals. So the market cap is 1.7 billion, and they are trading at book value. Equity is 1.7 billion. You can see that here. Stockholder equity is 1.7 billion. So they are trading exactly at book value. So there's no downside. Then the earnings were adjusted at 68 million, as you can see here. So these are quarterly earnings of 68 million. Times 4 is 275 million, and that's a PE of 6. So you're buying a PE of 6, which is very cheap. So it's not like you're buying something at PE of 15. You have a PE of 6, which will give you around 20% per year in profit. So this is a good company. Price to EBITDA is 4.6. They have a lot of ships here. They have around 3 billion in assets, 1 billion in debt. So that means they have a net asset value of 2 billion. So it's around 1.7 here, slightly lower than the 2 billion. And you can see here that their balance sheet is improving. It was at 1 billion last year. Now it's at 1.7 billion. So they have increased their equity. This is a good sign. Actually, the net income here, you can see here 370 million. They have sold some equities and also got some payments from a company. So this has probably improved the balance sheet here from 1 billion to 1.7 billion. So, but these are not recurring earnings, right? The adjusted earnings are 68 million, which is still a PE of 6. So we are in this company. Let's hope that shipping rates keep rising, because as it rises, then also the stock will rise. If this keeps rising, then also the stock will rise. And even if this stays the same, it will still rise, but at 20% per year. So it won't shoot up like this, but it will still go up 20% per year. It's better than putting your money in a bank account. What we need to look for here, also I haven't shown this chart yet. You can see here that the fleet growth is going to go to 0 in 2023. So there are not a lot of ships coming online in the coming years. So that's important. No ships means ship shortage. Order book is going up, but it takes time to build those ships. All the ships are now in use, which means rates need to go up. That's our premise here, and that's why Danaos will go higher. And I'll see you in the next video.